Sally is on the line. I believe you just got a general question for us today, Sally.
Yes, it's about the coal seam gas. They seem to have monumental problems. There was a program, Four Corners, highlighting these and what's going on in Queensland and all the chemicals that they're pushing into the Artesian Basin, and they're going to put some down in Warragamba Dam, and there's one going down in St Peters. Do you think that this will go ahead with all these problems, and will it eventually affect the share prices, or I just wonder what the panel think about it, and if they've seen these programs and the concerns that everyone has.
Sally, I'd like to say that, and I have a very strong view about this after watching that same program. My particular view is that we chastise China because of their human rights record. They simply dam villages, they ask people to move and they've got nowhere to go. The idea that in Australia you can take a drill rig and you can go and explore in someone's backyard or someone else's farm, for me that smacks of something other than the democracy I believe our country was founded on. And I think we need to have a really good look at our property rights. When we buy a property, where apparently we have the right to build anything on top of it, but we have no right to whatever's underneath. And I think that needs to change. The alternative is that farmers need to get together, start pooling their money and buying some of these leases up themselves and preventing it from actually occurring. I'm extremely offended that this can actually happen in our country. And I think everyone has a right to be very upset.
What about from an investment perspective?
I think the comments that you made were right. It's a fast-changing industry. When the car was invented, it changed the world, but not many people made money out of making cars. When the aeroplane was invented, it changed the world, but not many people make money out of airlines.
Still don't.
When the internet was invented, it changed the world. People lost a lot of money on the internet. I think this is another one of those examples.
Yeah, I agree with that. Robert?
Oh, thanks for taking my call. Yes,
Pleasure.
I just wanted to ask about Karoon Gas.
KAR. Are you a shareholder of Karoon?
Yes, I've got a couple of shares in that one.
And
just the two?
No, more than two.
More than two. So the question, I suppose, is should you hang on or should you sell?
Yeah, I see it sort of dropped recently.
Back in 2004, this particular business, investors had put in $4.7 million to, if you like, to kick it off. Let's call it kicking it off in 2004. Since that time, they've added to that equity, their contributed equity, they've added another $377 million. The shares on issue have gone from 41.6 million shares up to 177 million shares on issue. So the company's been raising money in its efforts to actually explore, but it's been losing money. In fact, it's not made a profit since 2004, and it's not forecast to make a profit for the next 3 years. That's a difficult business for me to give you a positive valuation on.
Yeah, and Selwyn, I believe you're interested in the small cap sector of the market.
Yes, I'd like to ask Roger if he has any small caps that are undervalued at the moment.
Okay. Geez, you're the favourite one tonight, Roger. What do you reckon?
Selwyn, look, I'll be very, very brief. The answer to that is yes, I do.
Oh, come on.
I'm in the process of establishing some positions in the small cap space, and look, they're perhaps they're businesses that I've talked about before. So if you go to my blog, you'll see them. But because I'm buying them at the moment, it's very important that I actually get. I'm not competing against you for those prices. But if you keep an eye on my blog, you'll find out what they are in a few days. If I look just at small caps, so that's companies with a market capitalisation of $300 million to $2 billion, and that's what I class as small caps. Below that are micro caps and then nano caps. But these are small caps. I've talked about these businesses before. Matrix Composite Engineering, I have a valuation on that of close to $11. Forge Group is another company that I've talked about a lot in the past, and I still think that it's good value. And for the reasons that I explained earlier when I talked about China and their need for resources, and also this ability to actually leave their money in Australia and invest it here, I think there'll be some impacts for those companies. The other two that aren't at much of a discount anymore in that particular sector, that small cap space that you've defined, ARB is at a very small discount to intrinsic value, as is Cabcharge. Very satisfying buying a company before it's in the ASX 300 or 200, and then seeing that additional boost come from the institutions that can now buy it.
Sure.
Because it's a great quality business.
Sure.
It is very satisfying to buy it long before it actually gets to that level.
Janet, BFG, you're interested in?
Yes, I'm just wondering what Roger has his thoughts on Bell Financial Group and what he thinks their intrinsic value is.
Talking about Bell Financial, not Big Friendly
We were talking
Giants.
about Roald Dahl, weren't we?
That's right.
Look, my intrinsic value for this particular business is lower than its current price. I have an intrinsic value of closer to 80 cents or 85 cents. The issue, this is a very simple business to understand. Stockbroking businesses I understand well. I've worked in them in the past. I've founded and started funds management businesses. So I understand these businesses. The issue, what we know from these businesses is, if you like, their leverage plays on the stock market. So if the stock market does well, and if you believe that the stock market is going to go up a lot, well, generally stockbroking firms, provided they're one of the good stockbroking firms, they'll do even better in terms of their share price performance. But of course, when the stock market goes down, they get pretty hard, hit pretty hard. And if you look at a long-term chart of this company, you'll see exactly that, because I think it listed in late 2007 in its present form, and it subsequently declined from I think it was $2, looks like it's $2.36 all the way down to about 37 cents. So just be mindful that if the stock market were to collapse, then the share price for stockbroking firms are going to collapse as well. And the other thing to remember, it's really important to understand when you're looking at the annual reports for these companies, have a look at the remuneration and have a look at how much the salary expense is for the whole organisation. Because sometimes, and it's maybe not the case for Bell Financial Group, but sometimes you find that they're structured in such a way that they reward the staff more than they reward the shareholders. So it's just something to have a look at. It's not something that I'm saying for Bell Financial.
David. Glad to have you on the program tonight, Graham.
Hi panel, thanks for having me.
A pleasure.
Thanks,
Roger, my call's directed to you, and I want to say very big thanks for your book and your blog and all the work you put in.
Thank you.
And the company I'm going to ask you about is ThinkSmart, TSM. I've recently read the annual report and a bit confused about where they're going with the UK. Would you like to tell me, if you don't mind, where they're heading?
Yeah, look, I actually think TSM is one of the rare A1, A2 type businesses in the Australian market. So I do really like this particular business. Australian companies don't have a great track record of expanding overseas, so it's really important that with this particular business, as with any business that expands overseas, that you keep a very close eye on its performance. And what does that actually mean? You hear a lot of people actually say that. What does it mean? It actually means you ring the company. You know, are they willing to actually explain to you precisely how they're going? How regularly are they updating the market with regards to the progress of their expansion plans, particularly when those expansion plans involve an overseas expansion? I've seen many good companies come a cropper when they've gone overseas, and as a result they've had to write down their investments over there, and that's treated admittedly by analysts as a one-off. But if management doesn't change its ways, then it can be repeated. So take a very close look at how that's going. Keep an eye on it. ThinkSmart is a good quality business. Just on the comments, I want to thank everyone who's actually enjoyed the book, and they come on. You know, I don't ask them to actually say those things.
Oh, it's your mum and family, isn't it?
Well, that wasn't my mum just
no,
then.
right, okay. That's right.
I hope not. Gee, her voice has gotten a bit deeper.
Yeah, sorry.
But look, I've never plugged the book very hard. I can see the bottom of the barrel now for the second edition, so we're running out of that. So if people are interested in getting a copy, now's the time to do that, because we are running out.
Okay, guys. My question, I'll be quick with it as well, is ASG Group. I've just recently seen it go down below probably a key mark on the graph. It's still fundamentally still a good company, and it's reported well. And just thinking, like, should I hang on for this, or just is it time to let it go for a while? Cheers.
Give you an intrinsic value range of 77 cents to 88 cents, but unfortunately it's not changing very much over the next 2 years. I've basically got sideways movement for intrinsic value.
Australia's Business Channel.